You've talked to us about certain, not just Apple, big cap tech stocks on this network before. Are you still a buyer and believer in some of these big boys?
Quite frankly, it's one of the few places I feel comfortable putting money, Brian. We're going to see a triumvirate of headwinds over the next couple of weeks. We're going to see aggressive Fed action. We're going to see Omicron rear its head more meaningfully again, as we saw out of Europe with Boris Johnson saying that it is more immune elusive and more transmissible than Delta, and he expects it to be the dominant form there. With the UK reporting 50,000 cases, Germany and France, I think that's something we should take note of. And lastly, we're going to see inflation numbers 100 to 200 basis points higher than we already see them. So in that environment, I want tech that is profitable, that has strong cash flows, that has sustainable demand, and has shown us that throughout all of the environments that we're going to see over the next 6 to 12 months.
We have a Fed meeting on Wednesday, and finally the Fed is in play. I mean, they're probably behind the curve already. The bond market's saying that, not me. And whether we get 1, 2, 3, whatever Fed rate hikes, what I know is throughout history, Greg, I've been doing this 26 years now, sadly, is that when rates go up, banks tend to do well. We haven't seen them perform that great. Are you a believer in the banks and financials?
Absolutely. And just like with tech, I'd focus in on a certain type of bank. Surely the interest rate hikes will lift the net interest margin, which will lift all tides to some degree. But until we get there, we've seen that those with powerful investment banking houses, powerful trading floors, powerful capital markets, powerful advisory fees have used those businesses to power performance while we wait for that net interest margin environment to improve. We'll certainly see credit normalize to some degree, but it's certainly a sector that I like into next year.